Biden acted like he wasn't surprised, but you know he was. Nobody expected Friday's jobs report to come in double what economists anticipated. Of course, a strong labor market likely means persistent inflation. If people are working and have cash to spend, don't expect prices to come down in any meaningful way. The job market makes recession fears seem unwarranted. Those 2 straight quarters of GDP contraction are mere blips. However, a look beyond the headlines raises at least a shadow of a doubt. Maybe we're on the back end of good news on the unemployment front, and on the very front end of not so good news. There's an increasing number of layoffs in tech and beyond, and while you can write some of this off to companies that enjoyed too much success too soon, you certainly can't say this about Oracle, Walmart, and Ford, who are amongst the companies cutting jobs. So, are these layoffs a sign of more to come? Well, the answer to this question is also confusing. Focusing on tech, in June, just 9% of workers in the sector said they feel secure in their jobs. That's down from 80% who expressed confidence in March. Attribute that drop in sentiment to the 32,000 plus who have lost technology jobs so far in 2022. At the same time, there are way more job openings than applicants. Some companies across sectors and at nearly all levels are finding it hard to fill positions. However, maybe this is shifting too, at least in tech. Data from Indeed.com shows a steady decline in the number of tech job listings. Then there's the data on part-time work. In July, the full-time workforce shed 71,000 people, while the number of part-time employees increased by 384,000. Of that 384,000, about 303,000 were working part-time because of economic reasons, such as poor business conditions leading to reduced hours. In July, there were 3.9 million of these involuntary part-time workers. That's higher than June of this year, but below the 4.4 million it was just before the pandemic struck in early 2020. The bottom line is this. While we haven't seen what we can call broad or massive layoffs yet, the news from Walmart, Oracle, and Ford, alongside the part-time employment data, should at the very least give us pause amid Friday's jobs report hysteria. From an investing perspective, dig this. Ford performed well on its layoff announcement. Walmart and Oracle stayed just about even. While you can't predict which company will drop the axe next, generally speaking, investors often respond well to workforce trimming. Companies usually make these moves for one of 2 reasons: to trim fat to beef up the bottom line, or to free up cash to invest in growth. Ford's move involves a little of both, particularly the latter, as it plans to invest in electric vehicles. This sounds good to Wall Street, so if we see more sizable layoffs at big firms, it might actually have a positive impact on stocks.